All right, good morning, everyone, and welcome to the final day of the world's largest FinTech Fest, Global FinTech Fest, organized by the National Payments Corporation of India, Payments Council of India, and FinTech Convergence Council. This edition of the fest is supported by the Department of Economic Affairs, RBI, and IFSCA. I'm your host for today, Chaitanya Rathi. If anybody has any issue with the headset, please reach out to our team working around. You can control your volume on the headset and you'll be able to hear us only through the headset. A quick shout out to our partners, our theme partner WhatsApp, co-powered by Amazon Pay, spend management partner Encash, in association with Perfios, payments partner Cash Free Payments, and CEO's dinner partner HSBC. We start with the first panel. We have a panel on the stage. This panel discussion is on democratizing access to private market investing. Our moderator for this session is Amol Dethe, editor, etbfsi.com and etcfo.com. And on the panel, we have Pranav Mahajani, president, trica, Ravi Ravulaparthi, CEO and co-founder of Qapita, and Ms. Visa Kannan, partner, Saison Capital. Over to you, sir.
Thank you. Good morning, everyone. I hope I'm audible. Can you just make your thumbs up? If you are audible, great. Thank you so much. So I think the proliferation of technology, here is the evidence. It gives a feeling that I'm driving a helicopter, but, it's a great feeling that the proliferation of technology has brought us so connected and brought us so together that everything and anything can be shared. We have never thought that even payment could have been shared just like that. I meet a lot of private equity investors and a lot of fintechs and startups. And let me tell you, the fintechs or the startups have received the funds without even meeting the founders, without even meeting the investors. So I think that's how the technology has shaped up. I'm sure you are enjoying the Global FinTech Festival, and you must have learned a lot, copied a lot of notes from the remarkable sessions that were lined up here. So this particular session is specifically about democratizing access to private market investing. I feel this is a very, very interesting topic because all over the world today, when there is a rally in the fintechs and the startup space, what will actually empower that rally is where the money is coming from, whether private equity investors, angel investors, or whoever is pouring the money. And are there major avenues to, empower and, add layers in terms of investing into that? That is what, partly we'll try to discuss here. And, we're supposed to have Maninder Singh, Juneja also, but because of some emergency business meetings, he couldn't travel to Mumbai. But I have three panelists here, and I will quickly start, with some basic questions, and then I will get into some specific. So, Ravi, let me come to you first, and, try to learn from you, is when we discuss about, and when we think that this space need to democratize, why is it important to improve this space or democratize this space?
Good morning, everyone. Pleasure and privilege to be at the Global FinTech Festival, and thanks, Amol. Very important question from my perspective. In fact, we bet on this space, and let the why question is really important. Why do we need to democratize access to private markets? If you generally look at historical track record, I was a banker for 17 years before starting Qapita, and the average time to IPO when I started my career was 6 years. Today, the average time to IPO globally is 12 to 14 years, and it will be longer in this part of the world. And if you look at what value creation happens before a company goes to IPO, one could easily argue that significant portion of value creation happens before the company goes to IPO than after IPO. And there's sufficient evidence for that. You can look at some of the biggest companies in the world today and so on. And so if significant value creation is happening before the IPO when the company is in a private stage, how does the rest of the world, not just the VCs, not just the private equity investors, how does the rest of the world get access to that wealth creation? And that is the why. And that is just one aspect of it. Look at it from an employee perspective as well. And employees are participants in the private markets. All the fintechs that you see around here, all the startups that you see around here give significant share of employee pool. And they're participants in the private market too. And they need to see value creation before the 14 years to IPO. Right. And therefore democratizing is, it's a pertinent topic.
Okay. Yeah, I think good to begin with you from Ravi, and I think the timeline and everything is really meaningful insights. Visa, let me come to you and take your perspective in terms of why this space needs an improvement.
Yeah, I think Ravi so articulately put it. I don't know if I have anything to add, but the only thing I will say is that even from like a retail investor lens or an accreditor investor lens, it's all about portfolio construction, right? Like you have risk and then you have risk-free asset classes, and this is just another asset class which I think everybody should have access to. So like we have mutual funds and stocks and gold and all of that, and you form your portfolio in a certain way. This is a new asset class which has come up, and I think retail investors, as with VCs and LPs and all of that, should have access to it. So I think that's what I would think.
Yeah, sure. Pranav, do you also want to add in terms of why this space need to improve?
Actually, if you look at any asset class which is growing in the country, you can look at crypto, you can look at what is happening in the AIF space and all. I think it's very simple. If the asset class has to grow, you need more and more participants. If companies are going to take say 12, 13, 14 years to really go IPO,
Right.
what's going to happen is they would need investor at every stage of their life cycle to go out, invest, and be with them. So I think more the merrier is what the way we look at it.
Okay, noted your points. I think so. Uh, so as we learned why this space need to be improved, let me try to change the gears and understand more from them in terms of what are the major pain points. And let me come to you, Ravi, again, and tell us more about this space. Currently, when you are investing in some fintechs or startups, or maybe when you want to democratize this space and take it to a next level, what are the major pain points do you see? I think the audio is really low. Is there any issue with the audio? Can we? Okay, please go ahead. I think the audio video team can do something here, or can we change the mic?
Check. Yeah, this
Yes.
should be better.
Yes.
Yeah. So when you think of any market to function, essentially you're getting buyers and sellers together. I'm just breaking down to the fundamentals. And for any asset class to trade, like Pranav mentioned in his previous response, you need to have you need to have more number of trades happening in the market, which means buyers and sellers need to interact and trade goods, and that's how the value of an asset remains, and you're creating greater access. That means three things basically. You need access to the markets, and that is rare in the private market assets. Only a few select angels or few large family offices get access to this asset class. Second, you need transparency. When you think of a public market and why shares trade that freely is because you have access to information. So information asymmetry is a problem to solve. And third, you need efficiency, which means you need systems and processes for these assets to trade, and which is where we are betting that you need, if you think about the public markets or any crypto markets, for example, significant amount of asset systems have been created. And if you think tomorrow the private market will be democratized, you have to invest in systems and processes to make it efficient. So access, transparency, efficiency. Each of these get built, then the market will thrive and the goods will trade.
Okay. Meaningful thoughts, Ravi, once again there. Visa, let me come to you and try to learn more about the risks, which is again a major pain points also. So, what are the major risks that you find while investing, or maybe scaling up this particular segment? And you could add whatever risks, maybe from legal or the portfolio management perspective.
Sure. I think even before this, we were having this very lively discussion because I'm an investor in a fund. Fund investing itself, returning the fund, returning a multiple on the fund is a very, very tough job. So I think, and what that really depends on from a risk perspective is the number of deals you see. The more deals you see, the higher the quality of deals that convert, right? Like, because you just know what's going to work, what's not going to work. So that's kind of how a fund functions. Now, when it comes to a retail investor, I think there are two broad types of risks. There's a business risk, which is that just the risk of not seeing enough deals, right? And not being able to kind of convert the good ones, so to speak. The second risk is also kind of, from a company perspective, is not being able to market your deal properly, because you essentially have a platform which is kind of, showing you a lot of deals. Now, how do you make up your mind? Because a lot of the times we invest basis meeting the founder, spending time with the founder, spending time on an idea, building conviction on a space, right? So I think it becomes very tricky as a retail investor to kind of make these bets at such an early stage. So I think seed, pre-revenue, pre-launch, very, very, very risky from a retail investor perspective. I think maybe other panelists can talk about how Series A, Series B might mitigate those risks. That's a business side of things. Then there's of course a legal side, right? I think fund investors, even more mature investors, are unable to understand legal documents to the extent that they should be. So there's something called a liquidation preference, which essentially means that later stage investors end up taking all the money or a chunk of the money in the case of an exit. Now, a retail investor doesn't understand this, right? This is one of the examples of what could potentially happen in the case of an exit. So I think there's a business risk, there's a legal risk, and the lack of awareness on amongst retail investors, and I would say even mature investors on all of these counts, is a thing that needs to kind of be solved for before providing bulk access to this asset class. That's I think the big risk.
Okay. Quite interesting points. In fact, there is another risk which I have seen a lot of investors telling me is this, that because of you guys have lots of funds and there are a lot of rally from the startups and they feel that the funds are easily available. So one investor told me that a startup came to him and asked for a funds, and the investor asked him, "But show me your product." He says, "No, I will build the product once you give me the funds." So the funds are perhaps available at such a length that anybody can become an entrepreneur and tries to raise a fund. But valid points on their front. So Pranav, let me, since we discussed pain points, we discussed the risks. Now, you tell us in terms of if we are planning to democratize this space and scale up and reach to a next level, what is it that needs to be done, and how can we go ahead and do that? What is your experience?
Actually, we need to learn something from the listed markets. If you go back, we were doing paper trading. With time, there was CDSL, NSDL, DMAT happened. And eventually, you have the exchanges today, BSE and NSE have the best platforms today in the world. I think what that is changing is that anybody who has money is able to go out and invest. So investing basically has 2-3 parameters. Whether you're investing in public market or private market, that doesn't matter. What matters is, one, your ability to identify a good stock, ability to build your conviction on it, write a check, hold on to it, and eventually exit, because we're all writing a check to get the money back, get much more money back. So I'll give an example. In 2013, when we started, can you hear me?
Yes, we can hear you. But I think the audio is a little low, right? Technical team, can we do something here? I think the audio is a little low.
Okay, yeah, I need to hold it closer. Okay.
Okay.
So I think 2013, when we started, at that time, angel investing was like a club affair. If you were a part of the top 4-5 institutions, like Mumbai Angels, Chennai Angels, you were getting access. And again, entry of that is rare, right? Because if you know somebody, they'll get a place in. Come 2018, when the AIF, the revolution happened, things changed significantly, where each one of us whose net worth is more than 2 crores can go out and write a check and be a part of that journey. Today, we are seeing, and you'll be surprised, in 2013, we had India's first Zoom account. That's the first time when we started saying that, okay, we can't go to every house and every party to go and sell. But come 2022, I think what has really happened is everything is on a platform. So the first step is you get everything on a platform. Everybody can see every deal. The moat, again, is your ability to actually identify the deal. And as Visa said it, that, I don't know which deal is good. And that's the reason you have the lead investors as a concept. And I think that's how the journey has started. I think we are exactly where probably 1990s, when the mutual fund revolutions happened in India, we're exactly there today. We were 20, 25 years behind that point.
Okay. Noted your points, Pranav. Ravi, let me come back to you again. You partly mentioned that your, the opening remark about the IPO and all. But do you think that the startups, fintechs, or entrepreneurs should create a significant value before going to public? How should they use private as a, a platform, private investments as a platform to settle themselves so that they can go and, tap the public market in a far more meaningful manner?
Yeah, see, there is a reason why the number of IPOs, the time for when companies have gone to IPO has changed. This is a structural shift in the global markets, not just here. The number of IPOs, the time to IPO in the US has shifted. It's also going to get delayed. Two things. One, for any innovation to happen, funding and technology need to come together. And therefore, that's true.
Unfortunately.
Looks like I lost.
Audio lost.
Hello.
I think it's lost for everybody, I think.
Hello. Hello.
I think it's lost for everyone. The audio from, I think it's fine now. Is it fine? Yeah, please go ahead,
Yeah.
Ravi.
So two things, like for innovation to thrive, the demands, once you're a public company, the demands that the investors have, the amount of rigor that you need to put in to actually deliver quarter-on-quarter results and so on is very high, right? And therefore, to give the private company and the entrepreneurs and the founders and the innovators some room, you exist in a private form, so you are focused on the long-term innovation for a while before you go for IPO. And therefore, all these venture capital funds raising billions of dollars to deploy into the markets, and every new fund that is raised is a record-breaking fund. And that is to fuel innovation in the markets. That entire ecosystem happened in the Valley first, happened in China later, is happening in this market now. The ecosystem is right. Today there are 90,000 startups in this part of the world, 65,000 startups as per Startup India, right? So that whole innovation to fuel, you need depth in the private markets. And because you have access to capital and so on, you are able to innovate, and it takes time for innovation to succeed and true value to get created. So the whole phenomenon of IPOs getting delayed is good for innovation, right? And as a result of the depth of those private markets, significant value gets created when a company is still private. Before it goes public, it's a very large company by the time it goes public today. And the idea of democratizing is how do people, more than a few select angels, super angels, and institutions, get access to this value creation journey. Having said that, it's also important to remember the context that Visa said. This is an asset class. By definition, innovation and all of that means it is in the high risk category. And therefore, you need to participate in the market, but you also need to be aware of the risks that are associated with this innovation. The way I see it is, this is fueling the innovation in the economy, this whole private market space. It is very difficult to innovate and take risky bets as a public company because the markets won't give you the room for taking the long-term bets that you need. And therefore, therefore the whole startup phenomenon. And therefore value creation in this space. That's how I see it.
If I can add, actually,
Sure.
the listed markets are very unforgiving because analysts are tracking you quarter on quarter. And largest investors in the listed market are actually mutual fund guys who is tracking NAV every day. So they don't have that much patience that you will put some money and something will going to happen in 18 months. So they say, whenever you're ready, you come, that time we'll appreciate you. So last year we saw a lot of companies going public. A lot of startup companies went public, and we thought that probably they will sustain their valuations when they go. But that's not true, right? Because again, the markets have come down and those stocks have been really beaten up. So I think this year and the year after this, so every founder we talk to today is all talking of profitability. And say, once you have profitability or sight of profitability, we'll go IPO. Not before that.
Okay. I think very relevant points from both of you on that IPO part, because we saw a great rally in the IPO, but the kind of response that the market showed in maybe 2-3 fintech companies which came with an IPO, a lot of them kind of delayed their process. So considering these points, now let me come to a very important point, which is a policyholders or a regulator's point. And Visa, let me come to you and learn from you in terms of what can be done on a regulatory side, or maybe what can policyholders do to maybe push this space Because if they don't do it, maybe it will not be democratized in a way that the industry wants, right? So, are there any checklists that's you have to which you want to share with the regulators or any points that you have?
Yeah, thanks. As in, for me, actually, again, it goes back to the point of risk, right? Pranav mentioned, like the public markets are unforgiving, and you have a certain checklist, which is pretty big for listed companies. So not that kind of regulatory checklist, but some democratization of information. Like all startups at certain stages need to come to market with a certain checklist on information and awareness that they create with the community that they're reaching out to. But I think more than the regulatory side of it, I think the platforms also, and I think these platforms, I think Qapita and all do a good job of it, right? Like in terms of educating also the customers in terms of what is exactly the risk here, right? So if you go to any of these other Angel List and Let's Venture and all of those platforms as well, if you've been an investor there, they will ask you multiple times what is your risk appetite. They will be like, are you comfortable losing this entire capital, right? So I think you need to kind of be very, very reinforcing that point time and again, and bringing in quality of like information needs to be a lot better before you know having this mass participation from the retail side.
Okay, I think, but considering the fintechs now, maybe Ravi, you can add quickly. Considering most of the fintechs are also looking at expanding to different countries, different geographies. In that perspective, what need to be done? Any common policy should be there.
I'll answer your question. Just add to what Visa said. For the regulator, it's always the greater good argument, right? You're monitoring, you're also enabling. Do greater set of investors need access to the market? They need access to the market. But should the regulator monitor what is happening in this space so investors are protected and the wider group of investors are protected? They should. And I think the regulators are doing that already. To answer your specific question, it's already happening. I think regulators are doing a great job. You would have seen that there is a Singapore, India fintech,
India
which
fintech
was
for
announced.
sandbox.
The Singapore regulators are also here, and so as we build this wonderful technology that is already working in a very large market, it is imperative. It's almost like an opportunity for the fintechs which are creating this technology to take them to other markets. Right. And I think with what the regulators are doing, and this is identified by regulators in multiple jurisdictions, right, and they are working together to create that. So I think that's already happening. And this is a big opportunity because we're creating some technology here which doesn't exist in other parts of the world. And so why think limited to this part of the market and take it elsewhere?
Okay, noted your points, Ravi. So maybe I will take one common question with all of you now, considering the future perspective. And by any chance, if you have any time left, maybe we'll ask audience if they have any one or two question, if only time is limited, if you have any time for a question. But the question for all of you, and Pranav, I will start with you, is, considering now we have to, democratize this space, considering the rally in the fintech and startup space, and we have seen a great evolution, and we're expecting this revolution to continue, what needs to be done on each of the levers to make a private market thrive, maybe in terms of access, efficiency, transparency, or anything else on a policy front? Any quick points that perhaps we missed earlier and you want to add?
Actually, one is I think more technology is required. Two, I think there's a lot of work needs to be done on liquidity, because today liquidity is a massive challenge. Number three is most investors we talk to today, if they have done something in the past, it's fine, but most are very new to it. So I think they know, you have the mutual funds saying that mutual fund investment is subject to market risk, but in angel investing nobody says that. Everybody say you'll become 100x, 10x. So I think that awareness is something which, as an industry, leaders will have to do. I think from a regulator perspective, I think we are okay. I think SEBI has done a phenomenal job. RBI has done a phenomenal job. And regulators' job today, especially SEBI's genesis today, is to make sure that the retail investors or the small investors are not hurt. Right. So I think we are there, over there.
Okay, sure. I think we lost again. Audio. Team, audio.
Yeah, I think we are back.
Yes.
So,
Ravi.
agree with everything Pranav said. I'll add a few points. I think I think companies, founders themselves will realize that providing liquidity and access to liquidity is a necessity for the company as well. You can't give ESOPs over 4 years, give shares to employees over 4 years, and IPO at 14 years and expect that ESOP scheme serves the purpose with which it has been set up. And therefore, providing liquidity, providing limited information and access to secondaries will become an issuer or company problem as well. And so company itself becomes a critical stakeholder in this journey of giving access to secondary markets. That is one, and therefore the point that Visa and Pranav mentioned in terms of access to information. If you want this to be on a platform, you want secondaries to happen, or you want a thriving liquidity to be available to your stakeholders, whether it be early angels or employees, you need to give access to information. Second is technology, which is systems. If fundamentally ownership is not managed on systems, your records are not digitized, then how do you create the efficiency? How does this trade efficiently? And we are one step ahead of the rest of the world. Any company today, any startup can dematerialize its shares and actually have it in digital form. So we have systems that work, and therefore we need to use more and more systems to manage this. And if fundamentally records are digitized, then they can also trade easily. And that is the second point. And of course, transparency. I mean, whether it's your ESOP program, whether it's angel investing, how do you actually give your investors continuous access? How many angel investors today can log on to a platform and see what is the current ownership, what is the percentage, what is the price? These systems need to be there for this entire market to thrive.
Okay, detail one, Ravi. Visa?
No, absolutely agree with everything Pranav and Ravi said. I don't have a lot to add other than just emphasize that I think education and awareness is pretty critical. But we are very early also. That education and awareness is a journey. As with mutual funds, it has happened. With the stock market, it has happened. So with this new asset class, it will happen. It will just take a long time, and I think the depth of the market, I hope, gets created alongside the education that happens. If one happens before the other, actually if depth happens before education, then I think there's just a very high risk profile of bets being taken without knowledge. I think that's the big challenge that we need to overcome.
Okay, noted your points. Can I take maybe one or two questions from the audience if anyone has any specific questions? Yes. Can we have a mic there, please?
My question to Ravi and maybe Pranav can address. You guys are doing, I believe you guys are doing fabulously well work, but I feel a couple of missing points, like in terms of, although you have touched upon broadly, like disclosure and fair price. Like for example, listed space address that. So as a platform to become successful, I think Visa mentioned, broadly we can cover, but as a platform provider, how do you address? Like fair price is very important for a retail investor. And that's a prime objective of a regulator because they wanted to address the retail investor objective. So when you democratize the private market, so this is the prime focus as a platform provider you should focus on. So I know you mentioned about the transparency in terms of the transactions, not in terms of the valuation metrics or rationale of the value of that, all this. And I believe the beauty of opaqueness among the private investors or the VCs are something retail investors, they don't understand. So if you can.
Sir, may I know your name?
Myself, Alok Shashmal. I represent a global technology platform. So we also provide platform to global structured product globally for all the global banks.
Yeah. Alok, very insightful question. So I'll give my perspective. If Pranav can add. First and foremost, the market force is a very powerful thing. And where I'm coming from, if there is a startup A on the platform that is providing certain amount of disclosures, and startup B that is providing certain amount of disclosures, and both of them want liquidity in some form for their shares, right? And one has a greater amount of disclosures, that will have greater amount of attention. So as you think about this scaling up, the market forces itself will be very powerful. Now, having said that, I'm not taking away the responsibility from either the platform or the regulation. So I don't think this asset class is still ready for retail investors. Worldwide, this is restricted to accredited investors, right? So, and I think as this space scales up, regulators will also put sufficient restrictions around this, KYC requirements, transparencies, and disclosure. It will never be as wide as the public market. But public market will always have greater amount, and that is continuous liquidity. Just to give you some statistics to give that primary capital, if it is raised, the difference is about 100x in terms of liquidity. If $1 trillion are raised in the private markets, the amount of trading that happens in the private markets is very different from the difference is 100x. 100x is not sustainable liquidity. Liquidity should be on a continuum. So the aspect of this is there will be a continuum here. There'll be some companies that will have greater disclosures and they'll have better amount of access to liquidity. And that will drive, and that market force is very powerful. This is the perspective with which we are building. It doesn't take away anything from the platform to facilitate greater disclosures. The way we think about it, any platform should facilitate the company to provide as much disclosures as possible. And then, the trading happens or buying happens with the investors with their own diligence and with their own risk. And that's how we see this market scaling.
I think just to add to this, every business has 2 or 3 key metrics to evaluate. What kind of growth, what kind of margins, what kind of CAC is happening. If I take a lesson out from the listed space, if you look at the SEBI DRHP or an RHP, it's a 500-page document. There are only 2 people who read it, the guy who writes it and the regulator. Nobody else reads it. My fear always is giving too much information. 2 is fair price is a myth. Even nobody is able to come and say this is the fair price, this is the multiple it is. It's purely demand and supply, just the way it happens in listed space. Some startups, we really see abnormal valuations. Funds will kill each other to write that check. And in the hindsight, we'll laugh at, what did you see on that day? In some startup, we absolutely undervalued and we'll see phenomenal return coming up. So I think it's a demand and supply. I'll agree with Ravi, this is not a retail product. This is absolutely not a retail product. It's not like you can't write 10,000 rupees and hope that you will make 100x out of it. It's not going to happen. When you write a check, you should be ready to leave that money aside for the rest of your life. You'll never get it back mostly. And 2 is too much information again is diarrhea, right? You really don't know what to pick up. So what we are trying to do is identify 3 or 4 key metrics on which you should be able to evaluate that business, and rest, we just let it go. That's what we're trying to do. Have we reached that point where 100% disclosure is there? No. It'll take us a few years to get there. I think how the market will evolve is what we'll see.
Right. Can we have one more question? We have a time for one more question quickly if there is any question. Yes, please. Can we have a mic there?
So, hi, my name is Sanjay. And you clearly said that this product is not for retail. From a policy perspective, can it be made for people who, let's say, have 10 lakh rupees of income, so that you have all the rights to invest, and probably there's no hassle? Because as of now, we are very skeptical, and there are platforms which allow you to probably invest 10,000, 15,000, 5,000, and as you mentioned, it's a gamble. You really don't know what you are getting into. So on policy front, are you trying to probably persuade the relevant stakeholders to make it a product which I can buy safely? I understand startups, but I'm not sure about the structures and other things.
So actually, the regulator is very clear on this subject. They're saying if your net worth is more than 2 crores, leaving your residential property in primary residence aside, then you are an investor who can look at this. Honestly, I think if you make the threshold lower than this, it will become crazy. Everybody is going to write check and everybody is going to lose. That in the longer run is very bad for the market. People come back to the stock market because you're making money. You can do gamble today, lose all your money, none of you will come back. We really want seasoned investors learning over a period of time. And I think just to add to what Ravi was saying, the best investors are actually the employees of some of the best startups which we see around them. So they see the startup growing, they understand how it is happening, they get ESOP shares, they get liquidity, and then they get that excitement and say, okay, I'll go and find another startups. So that's the first generation actually investor who comes in. For everybody else who has a lot of money to burn, there are many other avenues to burn your money.
Thank you.
Okay. Thank you for those questions. Quickly, how do you see this space in next 2 to 3 years? I have just 1 minute, maybe, 5 to 10 seconds, each one of you. How do you see this space going ahead in next 2 to 3
I think
years?
we have 100 odd unicorns today. I think in the next 3 years, this number should be approximately 200, 250 unicorns. And probably we'll have another bunch of 300, 400 companies whose value will be another more than $500 million. I think we are just starting off a bull run, which probably will have a 2 or 3 decade run ahead of us. We're exactly where China was 20 years back.
Ravi.
He covered all the points. I think this will be $1 trillion to $1.5 trillion dollars of asset class, and very rapidly growing. Significant amount of value creation will happen in this phase of the company. So if you have the investor with the right appetite, experience, and access, ability to diligence, this is a great asset class to participate in.
Right. Visa?
I mean, hugely optimistic. The macroeconomic tailwinds are just crazy, right? There's a swathe of startups which are growing. There's a need for liquidity. There are participants willing, ready, able to, participate in this market. So hugely optimistic about where this is going.
Wow, that's really meaningful, and let's be optimistic. I think soon we will be a $5 trillion economy if you talk about India specifically, and in fact we are dreaming of becoming a $10 trillion economy by 2030. And the kind of startups that are increasing, I'm sure will cross that number of 200. The question is how many of them will be successful, how many of them will actually hit the capital market. But on a private investing part, there is a small, comment I would like to make. I have been working as a finance journalist and was moderating some market show also in my earlier avatar at TV. And most of the times people used to ask me which stocks to buy. That's the easiest question, right? Where to make money. I used to ask them to invest in my account, which no one did. But meaningful conversation here, I think, and let's hope this space will democratize, the way we discussed, and it will reach to a next level so that more and more people will take benefit of, of this space and, raise more funds and invest more funds. Any of you wants to raise more funds or, everything, whom to reach out, the three, people here. But thank you so much for listening to us very patiently. Thank you, Visa, Ravi, and Pranav for sharing meaningful insights to the audience. Great learning for me as well. And thank you, GFF, for this opportunity. Thank you so much.
Thank you, everyone.
Thank you so much, panelists. May I request you all to please pose for a group photograph. And we're going to start with the next session immediately. And while we wait for the changeover, we'd like to thank our partners, our platinum partners, Google Pay,